Hi traders, welcome back to your favorite Forex channel, the Forex Geek channel. In this video, we are just going to be talking about a unique strategy called the grid trading strategy. So, have you ever wanted to trade without worrying about the perfect entry? Well, the grid trading strategy might be exactly what you need. All right, so just stay tuned. Okay, stay tuned as we go deep into this strategy. I'm just going to be breaking down how to use this structured trading method to automate your trades and take advantage of market fluctuations. Okay, so stay tuned. Let us first of all start by understanding the concept of grade trading. In case you are not familiar with grade trading, I believe you would want to understand what you are getting into, right? You want to understand what grade is all about before you even start, applying it. Okay, so grid trading strategy basically is a method where traders set up multiple buy and sell orders at specific price levels. For example, given certain conditions, perhaps I have done my analysis and then I decide to set up maybe I set up a sell limit order around here, and then I decide to set up maybe a stop sell stop order around here. Okay, sorry, buy stop, I mean. Maybe I set up a buy stop order around here, and then okay, it seems like it was not executed. Buy stop order. Okay, and then maybe I decide to set up a sell, a buy limit order around here. All right, these are just examples, right? And then perhaps I decide to set up a maybe a sell limit order around here. Now, if you will notice, I am strategic about the places that I'm setting my pending orders. I'm setting my pending orders around strategic areas. For example, setting my sell limits around resistance, setting my sell stop above, sell limit around resistance, buy stop above resistance in case of a breakout, buy limit around support, sell stop below support in case of a breakout. So basically, when you set multiple buy and sell orders at specific price levels, it forms a grid. All right, so I just want you to understand the concept. It forms a grid. So this ensures that as the price moves up and down, orders are automatically triggered without the need for constant monitoring. Okay, so you understand it now, right? So it is designed to work in both ranging and trending markets. Okay, so now if you want to effectively set up a grid trading strategy, you need to follow some steps. Okay, first of all, you need to identify the current market structure. It is important. All right, is the market ranging or is it trending? For example, in this particular scenario, we can see that the market is actually in a wide range. Can you see currently, right? It's in a wide range. This is the 1 hour time frame. It's in a wide range, right? So if the market is ranging, then you would look out for the appropriate levels to set your orders. If the market is trending, then of course, depending on the situation of the market, you look for appropriate levels to set your orders, and the current situation of the market is going to determine what kind of orders you are going to be setting. Okay, so once you've identified the current market structure, the next thing is to determine your grid spacing. Okay, so this is the distance between each order. All right, wider spacing actually works for volatile markets. That is the spacing between your orders, right? It works for volatile markets, wider spacing, while tighter spacing suits suitable conditions. Then after that, you set your buy orders. If it is a buy limit order is going to be below price, right? A buy limit order is going to be below market price. A sell limit order is going to be above market price. So this way, as price fluctuates, the strategy captures moves in both directions. If you are also a fan of breakout trading, then you can set sell stop orders, below support levels, buy stop orders above resistance levels. That is in the case of breakouts. If you are a fan of breakout trading, all right. Now it doesn't end there. Okay, make sure that you always use stop losses and take profits. Okay, because managing risk is crucial. So you can set For example, I set a sell limit around here, and considering the current market situation, it's a ranging market, right? So I can just decide to maybe set a take profit for this particular sell limit. I can set a take profit for maybe here. You can set take profit for this level. Okay, so this level is this should be around 1.28875. 1.28875. So I'm going to set a take profit for 1.28875. All right. Reason being that this is a ranging market. That's the reason why you need to understand the current market structure. If it's a ranging market, you are expecting the price to go up and down. Now, remember that at the end of the day, a breakout is bound to occur at some point. So bear that in mind, okay? So after setting my take profit, of course, I should also set stop loss, right? So my stop loss is going to be above, the resistance. So maybe I can use here for my stop loss, or I can even use the area where I set my buy stop, because if a breakout should happen, perhaps I can use this, let me 1.3205, right? So I can just decide to set stop loss at 1.3205, all right? So stop loss and take profit has been set for this particular order. Then for this particular one, you can decide to reference, a resistance at the top for your take profit. That is for that buy stop. You can decide to reference a resistance level for your take profit. And then for your stop loss, you're going to set your stop loss below the breakout point. So maybe you can decide to use maybe somewhere here, because if this breakout should be valid, price shouldn't exactly get back toward this zone, I guess. So you should be setting your stop loss below the breakout point, and then you're targeting resistance zones ahead for your take profit. All right, so this is just an example that I'm giving. So you do the same for your other pending orders, right? Okay, so it's very important that you set stop losses and take profit levels, all right, to prevent excessive drawdowns. Then you decide if you want to trade manually or automate the process with an expert advisor. If you want to use an expert advisor, you can actually automate the process, right? You know that there are, you know, there were many expert advisors out there, and of course those who designed the expert advisors, they gave the expert advisors specific strategies to work with, right? So if you want to automate your grid trading, you can actually perhaps design an expert advisor and give it the requirements for executing trades and all of that, so that you would of course go on with your daily activities without even having to watch your charts all the time. You can just come at intervals to be sure that everything is working out fine, to be sure that the expert advisor is doing a good job. Okay, on the other hand, you can manually set your pending orders yourself. You can just manually execute your trades yourself. Okay, it's not exactly a very stressful strategy, because it's just pending orders. The only thing is that you have to do the analysis yourself. You have to, if you're doing the trading manually, you have to understand the market structure, do your analysis yourself, set your pending orders yourself, set your take profits levels and your stop loss levels yourself. Okay, all right. So now this strategy actually has some advantages, and it has some challenges as well, right? Because grid trading benefits include the fact that it reduces emotional decision making, because the strategy is fully structured. It's a structured strategy, right? As you can see, the example I just showed, it's a very structured strategy, and capturing profits in both trending and ranging markets take place. Whether the market is ranging or the market is trending, you can capture profits. Although profit is not guaranteed, right? There is no strategy out there that guarantees profit, but it doesn't matter the market condition. You can catch good moves in all market conditions: volatile, non-volatile, trending, ranging. You are good to go. All right, and it provides an automated approach to trading. However, it also has some challenges. For example, risk management is key. Poorly managed grids can lead to excessive drawdowns. If you are unable to manage your grids properly, if you are unable to execute this strategy the right way, you can actually have massive drawdowns. That's the reason why you need to know how to do your grid spacing. You need to know what particular pending orders to use and specific areas to use them, to minimize your drawdowns. All right. So this is one of the challenges with this strategy. And then market trends can actually break the grid structure if not adjusted correctly. All right, so that's the reason why it's important to tweak the setup based on market conditions. So you have to be familiar with market conditions if you want to use this strategy effectively, and make sure that you always use good risk management. It's very important. If you want to be successful in the long run, you need good risk management practices. All right. So that is the great trading strategy explained. If this helped you understand how to structure your trades, hit the like button, subscribe to the channel, and turn on notifications for more trading strategies. Let me know in the comments if you'd like me to cover any other trading techniques. Thank you for watching, and I hope to see you in the next video. Happy trading.